Scott, I have great news to start the show today. I don't know if you heard, but inflation is no longer transitory.
Jake, you're being transitory about inflation, so it is, and it's one thing and another for you to say you have good news, because I don't know if that's really good news, because then that basically defunks or defaults my prediction that they are not going to cut rates. So
That's exactly
basically,
why
that's a problem
it's
for
good
me.
news.
So I don't believe it.
That's why it's good news. So let's start there. We've had transitory inflation or some sort for the last 5 years of this policy framework that Chairman Powell and the Fed were running. Big reversal, of course, last week in Jackson Hole. We had a very hawkish Jay Powell come on and basically say and allude to, if not say outright, that we are going to cut rates in September. What did you take away from that?
Terrible things. I was upset. I was throwing things at the TV and at the radio at the same time because I thought I was mishearing what Jay Powell was saying. Because you're right, he was transitioning actually, and many of us have transitioned over the last several years if we've seen that, in a way where he's gone from a hawk to a dove. And that's a terrible thing to do. I mean, doves are very much more pretty, very much more accepting animals, as it were. Both can fly. And Jake, I think Jay Powell is flying the coop soon, as we expect, courtesy of Donald Trump and company. Right. But more so, it's he's flying forward with regards to this more dovish view. And I think the word on inflation being maybe now dead is maybe the word you're looking for instead of transitory, is one that I think is a dangerous game to play, because there's way too much, in my opinion, as we've talked about before, of data points that still suggest inflation is not dead. Inflation being dead is a t-shirt, maybe one that we can wear next time, but one also that shows that the Fed needs to kill this inflation situation well before they get dovish on rates and get dovish on the economy, because I think the economy is in great shape.
The interesting thing, though, was he's going the opposite direction of you are, right? I mean, Jay Powell, my big takeaway was that they are ready to get inflation closer to that t-shirt level 2% that you say is unattainable. I mean, he basically put that at the forefront and said, we are going to control inflation. And that's why he thinks that rate cuts are available. My other thought was there wasn't a whole lot of other different substance there, right? He said inflation is sticky and persistent. He said unemployment is we're near full employment. He said the inflationary effect of tariffs he believes will be short-lived. So he didn't say a ton, but I do believe they opened the door to what some extremely smart people on the street and on this podcast have been saying for the last month, that we're going to get a cut, and we are probably going to get a series of cuts.
I'm going to cut you for saying that. And number two, I don't think anybody on this podcast is that extremely intelligent of what you said. Clearly, I don't remember what that was said, so I'm not that intelligent. But more so, it's like, yes, I agree with you. That was a weird turn, if you will. That was a weird twist. It was
a heel turn. I mean, he's a WWE villain now.
So that was basically like what? Like Mr. Perfect turning into somebody really awesome, and then obviously
I'm out of my depth getting hurt. That's
yeah,
my
you
bad.
are British Bulldog or something like that. Maybe Brutus the Barber Beefcake. Maybe The Undertaker, one of my favorite wrestlers of all time, going to kind of more of a crowd favorite. Regardless, Powell is not going to be a crowd favorite in my mind. And secondly, I like how you said that the inflation situation is now at t-shirt level. I think that's actually something that should be sweeping the country, because if it is at a t-shirt level at 2%, I'm down. Maybe you can cut. But also, Jake, here's the thing behind what Jake said about what Jay said to you, Jake, and me was, yes, he sits there and comes out there, and it really was like an invasion of the body snatchers. Like he had like a frontal lobotomy, because he came out and said, yeah, we need to be a little bit less hawkish on things. We need to maybe change our stance. We're seeing things data-wise that have changed us internally to make us think that we're needing to do a little bit, more accommodating. It's like, dude, what have you seen in the last month? Honest to God, not you, but dude, Jay Powell. We're on a dude level.
Yeah, of course.
What have you seen, dude, Jay Powell, in the last month, dude, that you have that suddenly makes you think that you need to cut interest rates? And if you dare say it's because the European economy is doing it, because the UK central bank is doing it, blah, 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 blah. It's like, there's one data point that's come out, right, in the last maybe month that's been kind of sort of bad, which was the jobs numbers, which are bad anyway.
Pretty bad.
But those jobs are pretty bad. Bad to quite bad.
60-year bad.
60-year bad. But you know what, man? Things happen. 60-year itches. Things happen over 60 years. A lot of things can happen. You give me 60 years, a lot of things can happen. I mean, look at how old I am. A lot of things happen in 60 years that I've been around on this planet. Meaning, is it one data point that all of a sudden that changes it? And I know there's revisions and stuff like that. It makes me think, dude, that you do it again. It makes me think that somebody's getting to the Fed. Somebody's getting into that governorship. Somebody's getting into the chairmanship and saying, hey, you better cut or else we're going to cut you.
I don't know. I mean, and to answer the European bank thing, the Fed has been extremely independent of other central banks and other Feds. So I don't see that's the case. What I think is the last cut we had was December of 24. So we've gone 9 months. They've given 9 months for the rate cuts of last year to make their way through the years.
Sometimes takes a full year, 12 months to 18 months.
And
so what are we doing cutting ahead?
I said this two shows ago. They're going to be quote unquote too late. We're going to have a negative job report. We're going to have a negative data point. Like we had a terrible 2-month revision, the worst in 60 years. You're not 60 years old, by the way, so don't oversell yourself.
59.
Not even. And here we are. We find ourselves at the point where Jay Powell and the rest of the Fed feel that we need to be cutting. And so why not?
But I'll tell you why not, because it's too early. And Jay Powell's too late. This is too early because, okay, why cut? So we just already established that the rate cuts have not fully gone in to maybe the system yet. Certainly the late ones haven't. I mean, even the ones that were done in September, which were highly suspect, probably came through at some point and probably didn't because they were wrong. Because remember the old joke about those rate cuts in September last year? What happened, Mr. Powell?
Yeah.
Oh, wait.
Open market rates
the 10-year,
went up.
yeah, that's the weirdest thing. The rates went down in the open market or in the Fed funds, but in the open market rates went up. That's very strange. The curve steepened. So also too, or maybe even flattened, I don't know, steepened, flattened, decreased. I don't care because it's a bad move. That's what it was. Then also, here's the thing. Why are we in such a rush? Because here's the thing too. The jobs numbers are bad because people are freaked out about the administration, I think, a little bit. People are freaked out about tariffs. People are freaked out about the immigration stuff. And so, yeah, people are cutting jobs because firms and companies are coming out and saying, we don't have those people on our staff anymore. We don't have those employees that are maybe not registered or maybe not documented or maybe not, keeping up with their stuff. And so all these companies are like, nope, we don't want to be the company that has some of these weird people on our list or on our employee sheet because we want to say that we're going to cut jobs because we don't want to have those people. So I think that's a whole thing that if you take care of the tariff thing, you take care of the immigration thing, as far as maybe not be so, in a word, hawkish about it, then maybe that ends up having the economy breathe deep and let it do what it's going to do, which is, by the way, what, I've got a question for you.
Tell me.
I have a 60-year deal. Let's go a little 60 years back. Let's go back 80 years, maybe 100. When was the last time that we had GDP over 3% and we made rate cuts?
Oh,
I can't think of one because I think that's silly thing to be
say.
doing. Right. I don't think there is one. And guess what? We're going to have probably Q4 because of the spending that I know you're doing at work. I've seen your Amazon charges. I've seen the stuff you put on the company credit card, Jake. And I've seen you take my credit card out of my wallet and rent it up. The spending in Q4 is going to be big. The spending in Q3 is going to be big. We're going to see GDP numbers potentially, I think right now, we'll just say potentially, this is my bet, they're going to be above 2% at the very least. So you got an economy that's growing sustainably on its own, even in the face of tariffs, even in the face of this immigration issues, because we need the immigrants here to work and to create jobs, and we need people creating jobs for the immigration people, and all these things that are going on regarding the economy, and that we need an influx of people from other countries here to keep the economy going. There's no way that kind of thing, with the economy going the way it is, needs rate cuts.
I follow.
Long-windedly said.
So let me ask you something. We've got 3 weeks or so until the next Fed meeting. So we've got another data point coming out in early September. We'll have jobs reports. Is there a way that this cut can be staved off for another meeting? Can we have a positive jobs report? Can we have no to a slight data revision for July and August in jobs that maybe tells them, okay, we were wrong. We got above our skis. We're not going to do it. We're not going to cut. We're going to wait another meeting. Is that a possibility?
Not going to do it. Just like George Bush the first. I don't know if that's going to happen because there's no way that Trump would ever say that he was wrong. I mean, I can't believe you used that word when it comes to the administration. He's never wrong.
Wait. I'm talking about the Fed cutting rates.
Well, they haven't cut rates yet. So what are they going to say? We're wrong about what we said in the J-hole meetings because they're being J-holes about Jackson Holes, about how they're going to be like, how they're going to say like, oh, now we're dovish. And then now we're going to be hawkish again. They won't do that. Number two, I think what's going to happen is I almost said we're going to get the cut. I hope to goodness we don't. But if we do get it, I'm going to have to do something on this pod to make 100%. Sure that I take my medicine because I think it's going to be another big mistake. And I think if they say, oh my gosh, we've got 2 bad job numbers and all things I've said in the background, which is like consumer confidence is fine. Consumer spending is fine. Business confidence has been dropping, but that's because, again, of tariffs and because of immigration stuff. It's not economically related. If you got a problem with the economy, boys and girls, go take a flight. Go to an airport.
Go to Kohl's.
Go to a restaurant. Go to Kohl's. Go to Marshall's, one of my favorite stores.
That's your favorite
store. Go to Dairy Queen. And actually, there's this little smaller restaurant that I used to go to a lot that was really great called Taco Bell. Go to Taco Bell and see how many people are in the line, see how much the stuff costs, and see how happy people are and how much they're working and how fast things are going there. The economy is fine. Fine. That would be fine. And therefore, I think it's something that the Fed, remember our old joke. If the Fed is out of the picture, if they're off the headlines, if people are not messing with the economy and letting the American consumer and the American businessman and woman do it, that's when we win. And that's what we're doing right now is we're getting involved in that stuff and crapping it up.
Fine, fine. I mean, that goes back to you winning a spelling bee back in, what was it, 2nd grade, 3rd grade?
Actually, that was sophomore year of college. That's
I'll tell you, I did a spelling bee in 2nd grade. The only word I spelled wrong was of. I couldn't picture in my head what it was. I spelled it UV.
UF. I thought you said UF.
No.
UF, and also, well, you actually misspelled a word very important on LinkedIn if anybody wants to check that out.
You spelled adamant wrong.
You did.
But let's get to the market reaction, because you mentioned that we do the best when the Fed's out of the picture. So one last note on the Fed here. So Jay Powell takes the stage on Thursday last week, and I mean,
I think it was Thursday and Friday.
Yeah,
Friday was
S&P was up 1.5, Nasdaq was up 1.5,
Small
Dow was up 2
4.
to record highs, small caps were up, and to your point, bonds were down.
Yeah.
Rates were down.
Bonds were
down a little bit. So clearly the market is saying that they actually agree with this cut for the first time in 9 months. Last year with the 50 basis point cut, like you mentioned, like we said on our LinkedIn videos, we had open market rates go up when we cut. Made no sense. Clearly was the wrong move. But if the equity markets and bond markets are in agreement, how can you even argue that we're in a better place if the Fed stays out of the picture?
Because it's not sustainable. Because if you look on Friday, too, look deeper. Small caps up 4%, Bitcoin up, bonds up as far as price, foreign stocks up. Name it. Like even
bonds up because rates are down.
Right, but like, how could people be buying everything?
You know how that works?
Like, yeah, sort of. It's like a seesaw, I guess. But then I'm not the fat kid on the seesaw, so usually I'm up in the air. The point is, how could there be money just like flying in everywhere? Like that's just not sustainable, though. Bonds and stocks usually move in the opposite direction. Gold was up. Like I said, Bitcoin, all these alternative assets were up. Like everything was up on Friday because a lot of folks, I think, were thinking of you want to talk about erudite, intelligent, very, very smart people were thinking that Powell wasn't going to do this turncoat thing. He wasn't going to do this transition into a dove. And so he did. And all of a sudden, you know how it is with markets. They're very emotional. They're very sensitive.
They really
especially
are.
right now, just like me. And so they end up getting crazy when there's stuff that goes a little bit of awry. I mean, clearly I do too. I mean, look at the podcast the way it's going right now.
Sometimes you get unhinged.
Sometimes.
Yeah.
And so when I'm hinged, I'm on the border of chaos and order.
Right.
And it's like there's a thing going on where like you have a day like Friday and everything gets forced into more trading. I mean, we finished more or less on the highs, and all these great media companies that are out there that are talking about how bad the economy was and how bad the markets were the whole week, Monday through Thursday. And then on Friday, we're back. Everything's great. And the economy's awesome. And the Fed's back in play. This is really great. Everybody's go out and buy stocks. Shame on every media person that said that. Luckily, I wasn't on TV last week because I might not have said anything like that and gotten in front of some people and made fun of them.
Yeah.
But there is an emotional backing to this, Jake. And I think you're right. I will say this. The market does, for some weird reason, want the Fed to come in and cut. And I think they're wrong. Not the market per se, but I think some of these participants.
I think the market does. I think you're right. I agree with the sense of media in general, right? We say things are good when it's green. We say things are bad when it's red.
It's unbelievably bad.
That is a point. You mentioned a point I really want to get to is we had that huge response to Fed Chairman Powell's speech, everything up 1.5%, 2%, 4%. All that did was pair losses from the start of the week. And that's the theme I want to hone in on right now is tech was really down last week. And you got a lot of names that were really suffering
Smashed.
Monday through Thursday, like you said.
Semis.
Is this the start of a rotation out, or is this just a cool down so that we can go higher? I mean, let's just be clear. The big data point for the rest of August is tomorrow afternoon or today, this afternoon as you're listening, is NVIDIA earnings. I think that'll take the market higher or lower depending on how they report. But are we in for a little bit of a rotation out of tech, or is this just a cool off?
Got it. I thought we were talking about the release of my diary tomorrow, which is great from when I was growing up. Talking about
I don't think anybody needs to see that. You need to be treated like Creed Bratton in The Office. We're going to give you an open Word doc that just says Scott thoughts.
Yeah, that's fine. And you think you're Jim Halpert, and that's ridiculous. Then nobody is. Jim is great. John Krasinski, love you. It's funny because you're right. The tech was dead last week. Like nobody cared. Like everybody's like, oh my God, this is a precursor to NVIDIA earnings just being a complete stinker next week.
No, I don't think that.
Which I don't think so either. But there's a lot of pressure on NVIDIA.
For sure.
AMD was this. Intel's like now corrupt and all this stuff again. And like tech was dead until Thursday night. And it's like now all of a sudden the Fed comes out and you're right. Like, and tech got a huge boost. There's not a rotation going on per se. I think what's happening is just like anything. And I knew this, growing up in high school, people go after the good looking, hot, cute, popular person. They go after the prom queen eventually. And
that was you.
Me, I was a little bit of both.
Yeah.
It was kind of both sides. And it was like, I did both. I was actually prom king, by the way. That is true.
That is true.
So
We've
it's
talked
like,
about that.
and at a small school, and there wasn't even really a vote. But
didn't you go to an all boys school?
Yes. And there was one girl there who voted for me. So that's how I got it. And it was one of the teachers. But it's like, there's a thing about that, where like these are the tech stocks, they're the darlings. They're always coming back. They're always carrying this market. They're the big portion of the S&P, like we said, over the times, it's like the amazing portion of the S&P is tech. And so those are the big carriers of the water buckets. But now when the tech gets really, when tech gets beaten up, people jump on it and kick it and smash it. But when tech starts to come back, people are like, oh my God, we're just kidding. They're fine. What to me that tells you is tech is still a leader here. And tech, if you look at stuff that's real deal Holyfield type of things, that's a boxer back in the day, which is like you have a tech.
Evander?
Yes, Evander, that's
Let's
right. Who
go.
may or may not have his ear bitten a couple times.
Yeah.
But there is a thing on my birthday, by the way, in
June 28th.
1996. There's an issue where tech comes out and they're going to keep showing these earnings. They're going to keep showing amazing free cash flow. They're going to keep showing future developments in this economy. And that's the whole thing. Back to the economy. How good is the economy? Pretty darn good. How good is the economy based on what tech's doing? Pretty darn awesome. And tech is part of this whole deal and part of this whole, you're talking about rotation, like tech is going to carry us. I mean, you're a young dude, relatively speaking. Talk about how like kids your age, as they say, are using tech like crazy. And that's the new generation. And that's even people like me, like an old guy like me, an old fart. I love tech. I love ChatGPT. You know that. I have a chatbot that I'm very, very dear to.
Yes,
I mean,
you do.
and that's a basic thing that I learned how to do.
Concerning, I would say.
Very concerning.
Yeah.
I'm concerned.
Yeah.
And so is he.
Yeah.
And it's like there's a thing about how like tech is taking over things. And so there's a reason tech is good. And there's a reason tech comes back. And so no, I don't think tech's dead at all. In fact, we have said, and we told a lot of our advisors, we told a lot of our clients, you get any pullback in tech, you get a pullback in NVIDIA tomorrow, and depending on how bad it is, how slippery it is, buy it. Because that's going to drag down other tech and it's dragged down NVIDIA if they have a bad report. And that's just a buying opportunity for me for the long term.
Yeah, I totally agree with that. I mean, it comes down to like the schism between, are you a trader or an investor? And if you're an investor and you get these pullbacks and these names, you use the word I have in my notes, darling. Yeah, absolutely. You buy on the lows and you hold. If you're a trader, you think of this as an opportunity to get in and out of the positions. Now, I want to split tech into like two segments here because again, you use the word darling. I mean, the darlings, let's think the darlings of the AI trade of the last few years, right? MSTR strategies down 35% from the peak. APP app Lovin is down 14% since highs. Even, PLTR is down. Palantir down 15% off
close
August.
to 20 at some points on the
lows. Then the household names, right? You got Meta down 2.5% in August. Microsoft down 5% in August. And Apple continues the struggles that we talked about a couple weeks ago.
But Apple's been better lately because they stunk for 8 months of the year.
It's been better.
But they've stunk for the first 7 months. And that's the thing that like some of the big media companies won't tell you is that like, oh my God, Apple's like outperforming, blah, blah, blah. And it's like, well, they sucked for 6 months.
Yeah.
And Meta went crazy for 6 months. So
Google's
it's naturally that they
up.
would pull back. Yeah, Google's coming back too.
I just see a little bit of concern here for tech. I mean, no. I'm not of the it's overrun and it's overdone. Of course, we know people like that like to point to timing and valuations and pullbacks. I'm not in that camp, but I do think there has to be a little bit of a cool off, maybe for an extended period of time. All we've gotten was December of last year with DeepSeek and February of this year until April. That's like 2 months of the last 3 years that tech has underperformed.
Yeah, and those were like
talk about not sustainable.
And talk about how like stupid occurrences those were. DeepSeek, who gives a freaking what on that?
Agreed with that. Who even knows if it's real?
Yeah, I think it's. I don't think it is. I mean, I don't know if China's real at this point. And then also like, what's the freaking and like Liberation Day and then that stupid board that was put up about the wrong tariff numbers.
The board was hilarious.
You want to talk about like wrestling games? Like that thing should have been smashed over his head. Not Donald Trump's head. I wouldn't disrespect
You're back
the
on
president,
his bad side,
but it should have been smashed over.
Recurring theme.
It should have been smashed over maybe like the Ultimate Warrior's head because or Macho Man took a lot of chairs to the head. We're like, those were numbers that were just so stupid. And the whole premise and the whole expression of like Liberation Day and these tariffs and blah, blah, blah. If you notice, we've had more. I mean, this is actually cool about me and the president is like, I tend to delay things and put things off a lot, as we've done the podcast. We were supposed to do the podcast like 9 years ago.
Yeah.
And like 9 months later, I kept saying like, let's delay. Yeah. We put so many delays on these tariff things. Like, I don't even know where we are with China, but at this point, like they're going to be like, hey, can we do another delay? Can we get another like, delay of execution? Like it's ridiculous. Just like maybe the justice system here in the United States, like who knows what's going to happen? We so far have nothing to show for like really any of these tariff workouts. Like we have problems with China and Mexico on trade still, but then we got stuff on the back end of USMCA that's eliminated or excused. The China thing's not going very well. The Europe deal, I mean, yeah, sort of. I mean, it's like there's nothing been going on that's gotten done. So that point, Jake, the fact that the market has stayed where it has and actually got new highs is pretty darn amazing. And one that would say, gee, let's take a step back and let's just be kids. Let's just be kids again. And let's talk like we're studying for a spelling bee, which you might want to do at some point if you put something on LinkedIn again. I would just recommend it. Or use spell check, F7. It's like,
I don't spell anything wrong, so that's why I don't check it.
But it was just a Freudian slip.
A for E? That's not Freudian. That's just,
that's kind of, it's scary though.
Okay.
And I can think of why on the R-rated version of this, but more so, like, let's step back though and think about that. Like, is the economy really that bad to where we need a 50 basis point rate cut in the midst of all that stuff?
No.
Oops.
No, we need a series of 25s. We need 50 25. Lower. So that's what I've said since the start. I did not say 50. I said 50 lower.
So 50 lower.
I'm not 100 lower. I'm not neutral. I'm 50 lower.
I think we should raise rates because here's the thing. Good. 50 lower. So it's okay. So, hey, mom and dad, I went out and drank for the first time. Yep. I only drank like 5 beers in a row instead of like smashed a handle of vodka. Is that cool? No,
Honestly,
that's
the
why.
thought process, that's a good analogy.
Actually, I used that. My dad got really mad at me either way. But the point is, because it was his beer, the point is that like it's not needed. And let's save these rate cuts. Save your tears for another day, which is I think Jay Powell or somebody like that. It's like save the rate cuts for another day, Jay Powell. Or guess what? Save the rate cuts for the next guy that comes in. Because I'm going to tell you something else. We'll talk about the Fed and how screwed up things are at the Fed.
Quickly.
This is the unwinding, let's say, of the Fed happening right now with all the things that have gone on with the Fed governors and the stuff with that gal. I don't want to mention her because I think it's stupid to be dragging her name through the mud. But the thing with
President Trump's done it enough.
That's right. There's been plenty. And the point is the Fed is getting emasculated. The Fed is getting destroyed. And it's something too that you're going to see a different Fed next year. And that's something to be concerned about if I'm a market participant. So until then, let's make hay while the sun is shining. Yeah. And let's make hay while the rates are stable.
Yeah. Last thing on tech here before we move ahead. I mean, to use your analogy from a couple weeks ago, you just brought up. I don't think it's time. The party's not over. We don't have to turn the music on. We don't have to turn the music off. The lights on. Parents aren't home. I think tech is still going to run. So let's do a quick preview of tomorrow afternoon or today. This afternoon as you're listening to NVIDIA earnings. In my mind, right? The problem with these big names and the incredible earnings reports is not, are we going to have revenue beats and are we going to have earnings beats? It's the rate of change. What you like to say often, the rate of change or the rate of change. Are we going to maintain, if you will, the positive slope of the earnings reports? And that's what I think is going to be the issue. I think revenues are going to be really good. I think earnings are going to be really good. I think the China deal for NVIDIA has given Jensen the ability to provide good guidance going forward and say that they have that ironed out. Tariffs may not be that, impactful for them.
Sure.
So I think it's going to be really good reports. I just worry that it's not, margins are going to be not 65%, which they were 2 quarters ago, and they're not going to continue the growth of their earnings that they have over the last year, and that's going to drive the market down. Where are you?
I don't know. I think you're going to be in tears. Save Your Tears is a Weekend song. The Weekend, by the way.
It's by Ariana Grande. I mean, I thought you were going to pull out like a 1970s, 80s song.
Oh, well, we could do that. I mean, how about this? Enjoy the silence that you're going to have. That's Depeche Mode because of when NVIDIA comes out and makes, I think, just like a comment like you said, which is like about the future and about the things with China and things like that, because they're going to Jensen Huang, the CEO, who you seem to be on a first name basis.
I mean, you seem to be on a first name basis with Jay and Trump, so why can't I choose Jensen?
Naturally, I'm kind of a recovering economist, so I better be. I want the Fed job, Mr. Trump. Please, President Trump. I would love the Fed job because I will cut rates. Week. But the future part of what NVIDIA is going to do tomorrow and Wednesday is they're going to come out and talk exactly what you said about the future, about the prospects of working in this global regime, working around tariffs, working around things like, here's a concern for NVIDIA. They can't make some of these chips big enough, fast enough, strong enough.
No, the demand,
and that's crazy.
The demand is incredible.
Off the charts.
It's only ever been if they could keep up with supply.
That's right. And Jensen, as you like to call him, J-Bone, he actually is... he's coming out and he's talking more and more about the more help they need to build stuff and make stuff. And so when that comes out and when that comes through the airwaves and when that comes through in the conference call, we'll be listening to it. So definitely check back with us on LinkedIn and so forth about updates because we own NVIDIA. It's like there's still a reason to think about how Jensen is going to frame that. And if he frames it exactly correct as he has been, because the market has just been basically putty in NVIDIA's hands, I think there's a reason to think that if there is a drop in NVIDIA, obviously, like I said, buy it. But secondarily, there's a reason to think that NVIDIA is that point and that catalyst that eventually carries the market even higher and higher tomorrow and days after. And then what are you doing, man? You're going into a September meeting at the end of the quarter. And let's say the market's in there 5% higher from here. Jay Powell's going to come out and take another shot in the back, and Trump's going to knock him over again almost, and then say, hey, you know what? We're going to cut rates after all just because I don't want to get hit in the back again. Maybe that's why.
Yeah, 15% higher on the year and cut rates. That would be an interesting situation to be in.
And rates, and real quick note, I hate to say this because a lot of people get angry with me about it, and I'm not used to that. I'm used to everybody getting angry.
Right.
And it's like, rates are not that high.
No, historically,
so what's the
pretty
deal?
Average, if not
right. And you're a big historian,
average.
Jake, because as old as you are, it's like amazing you remember things as far back as you do, like back before
60 years ago.
Yeah, before 2010. And it's kind of like rates aren't even a problem here. The problem is the viewpoint on rates.
Yeah.
The problem is we're babies about like, oh my God, a 5% mortgage rate would be really great. Do you realize too, and this is kind of like a funny thing, like if you're a buyer, a home buyer, and you can't afford a house at 6%, but suddenly you can afford it at 5%.
I don't disagree with
That's
you.
not really the greatest buyer in the world. Not one that I would generally say as a bank I'd be lending to that person. But hey, everybody in the home builder market, everybody that comes on TV, and everybody that like wants to talk about it in DC says, once we do that, everything's gonna be fixed. Give me a freaking break, and I'll tell them that they can go ahead and smoke more of their breakfast if they want, because that's not the kind of environment that I want to be in as an economist or as somebody that's part of a nice economy that we have.
Yeah, that's a pretty valid point.
Thank you.
Moving on to, I think, what is the best topic in the world. I mean, the only thing that matters, really, is
your dating life. What?
No, my dating life is very secure, but
Funding secured?
We're back. We made it. The long national nightmare is over. Football season is upon us. We are turning the corner on Saturday. So let's do a quick NFL preview, quick college football preview.
Well, let's start with the Saturday. What game? What's the weirdest? Well, there's a weird game
Texas,
on Saturday.
Texas, Ohio State.
Right, where I grew up, near Columbus, Ohio.
Didn't go to Ohio State, though. So
OHIO. I did not go. I couldn't get in. OHIO, the only state where it takes two men to spell it. I'll tell you what. I think that that's going to be a great game. I can't believe it's a 12 o'clock game, Central Time or whatever it is.
It's got to be big noon kickoff.
Yeah, big noon, but that stinks. I should have been a night game.
That's back to our conversation. A month ago. TV's ruining sports.
They are.
Everything's about the brand deals.
Yeah, TV, the brand deals, and the networks are ruining sports. Not really much. The TV is nice to be able to watch the game, Jake, personally, or stream it, I guess, or even just watch our pod instead. But I think that game is great. I think college football being back is going to be good. But man, the NIL's changed things so much. I don't like it that much. I think it's killed college football in its kind of quintessential, kind of very unique way it was. Because if I want to see players be traded and change teams and like totally, backtrack on stuff. And one of the best things that I would have seen in the NFL as far as backtracking and like kind of stabbing an old team in the back. Brett Favre, when he came to the Minnesota Vikings, my favorite team, which was awesome. And that was a great year. And then we
thought we were going to get a Rodgers repeat this year.
We did. That would have been amazing, but they didn't want Rodgers near to die. But the funny part about that was that that was an NFL thing. And that was akin to the NFL and, the highest bidder and then the biggest turncoat, player could go to the other team. Now it's like, hey, you go to Ohio State, you grew up in Columbus for like 25 years or 20 years over, however old you are when you go to college these days. I don't know how old these guys are. It's like you grow up there for 20 years.
That hasn't changed.
And all this, it hasn't changed. Even me. And it's like those guys like root against Michigan for 20 years. They grow up, they hate Michigan. All of a sudden they transfer to Michigan mid-season or not mid-season at the end of the season because they're getting more money. Like that's a joke and that's ruined the sport. But I will tell you this much. In light of that, I think college football, and now what are they doing now? How big is the college football playoff now?
12 team for this year. It's probably going to 24 next year.
And we're going to have like March January.
That's what they want.
January jungle. Like when we're going to have like 25 teams. It's going to be so stupid. And it's going to be in the middle of winter, which would be awesome because we have maybe some snow games.
Yeah.
That would be fun. Then we can go to those and throw snowballs at each other.
Yeah.
Or at the WNBA players, maybe instead of what they did throw there a couple days ago or weeks ago. More so, why then are we doing that in like both leagues? Like that to me makes everything kind of just muddied. And so I'm actually more excited about the NFL than I ever have been. And I still think Ohio State wins the championship because it doesn't, actually a quick thing. That doesn't matter who loses this game on Saturday. That's their,
right.
It's totally cheap in some of these games. It doesn't matter other than betting on the game, which I think I'm probably going to take Texas, believe it or not.
No, you won't.
I think I probably will. It's like because most of the public's on Ohio State. It's like, I think that there's like that whole effect of, it was really cool when you would go like 11-1 or 10-1 and you may not make a 14 playoff.
For sure.
But now you can go like what how many games they have now? Like 12. They'll go 9-3 and they'll have like 3 bad losses, and that team will be ranked like number 3 in the postseason playoff. Like it's a joke because they're Ohio State or because they're Alabama or because they're your favorite team. What is it, Cal Bears? Anyway,
probably Indiana.
Well, whoever they are, they used to be good. They lost Penix
last year, no big deal.
Well, but they got smashed by Ohio State too.
Lost by 1 touchdown.
Well, it was pretty bad. That game was way. The score didn't tell.
Score told the story. Don't worry about it.
Well, Ohio State was up by like 20 the whole game. The point is like the NFL, I think, has a great chance to come back because they stayed true. Other than overpaying players. Dak Prescott and the like.
The deals are unbelievable.
The deals are unbelievable, and the ticket prices are unbelievable. That's why, I'm not taking you to any games this year. It's just not worth it as far as taking you versus somebody else. But I think that there's something to be said about the NFL being back because you're right. I think the NFL quality of the game and I like how they've changed some of the rules and the kickoffs and stuff like that and some of the reviews. I think NFL is going to come back in a big way because I've been kind of sour on the NFL for the last couple of years.
Yeah, I think the point about college and NFL being muddied is 100% correct.
Thanks.
I mean, you need. NIL is cool. You got to pay the guys. I mean, they drive a ton of revenue into these schools, but there's got to be a cap. There's got to be limits on transfers.
Or a contract?
A contract. How can you just go one team to one team to one team for 4 years? I mean, it's a little ridiculous.
It's ridiculous. It's like kind of cloaked too. Like they're like an NIL. Oh, how much money is he getting? I'm not really sure because it's running through the whole athletic department.
Yeah.
So they got to spread it out.
How about your rival Bryce Underwood getting paid $9 million to go to Michigan? I mean, that's ridiculous numbers, and it just it does sour.
Bryce.
Yeah,
it sours. Yeah,
it sours a little bit of the feel of college football, where it's like this is different. And the playoff thing is 100% a problem. Where I mean, on the one hand, you get 12 teams, and so you can have the 9-3s, but you include like a Liberty that's 12-0, didn't play anybody, they're in the playoff, and then they get smoked.
Is that ridiculous. Jerry Falwell's?
Who?
Jerry Powell. Yeah, you'll figure out who he is. Here's a quick thing though. Let me ask you a question for once. I said Ohio State probably wins it because I'm kind of like sour on college football a little bit. Who do you like actually to win the championship? Because I mean, there's other teams out there. I heard Alabama, Texas, Georgia, some team called Penn State.
Yeah, I mean, I think the if you're an Ohio State fan, the great thing is you're running back Jeremiah Smith this year and next year.
Amazing.
So should have a pretty unbelievable opportunity to have the best offense in the country again. But I mean, this is what the cycle of college football is. Maybe it's changing with NIL, but for 15 years, it was Alabama every other year. I think we're in the Georgia period. I think Kirby Smart's they didn't have the team last year. Carson Beck was not a good quarterback. He's in Miami now. I think Georgia comes back this year, and I think Georgia wins it.
Yeah, right. Jeremiah Smith, by the way, is a wide receiver. Those are the guys that catch the balls.
That's what did I say?
Running back.
I did not.
They don't take handoff, although he does do end arounds. I think we can check the tape on that.
We'll roll the tapes.
Roll tape. Jeremiah, he's sorry about that. He knows you're a receiver. I think Georgia, I don't know, man. Georgia doesn't seem to ever get over the hump. I mean, they've had some amazing.
Get over the hump. They won 2 in like 4 years, 2 and 3 or 3 and 4 years.
Yeah, but no, I don't think they won 2. I think they might have won 1. We'll have to go and check that out. But it doesn't matter because Georgia had this. They had the domination of the players. And frankly, back in the day, there's this guy named Herschel Walker that went there. They never won anything. Garrison Hurst went there, I believe, too. I think actually AJ Green went there too. These are all guys you probably don't know, but folks that are listening to the podcast are like, oh my God, they're right. There's just a lot of
AJ Green, like the Bengals, AJ Green.
Yeah, AJ Green, like who's awesome. That guy was a dominator. I mean, there's just teams that have this kind of history of blowing it, I feel like. And so one of them on that list that I just gave you is Penn State. Penn State's not going to go anywhere this year. No. And that's why I think like Texas wins this game against Ohio State.
Little James, he can't win the big one. Coach James Franklin.
I mean, he had his chance in the last couple of years and just stunk it. And they got blown out by Ohio State, one of them. So like, I think it's still these issues where a lot of the teams that are out there that are kind of getting their sea legs think they're getting their sea legs until they get whooped. It's kind of like last year. What I really enjoyed was when Deion came out. When Deion came to Colorado and was like blowing it up,
games.
And they loved him. Yeah, they had a couple great wins early on. Everybody's like, oh my God, it's prime. He's back. It's this and that. He looks great. He's got his hat on.
The talent level was still
it was awesome.
Huge
and Shadur, who obviously is coming out to be probably rookie of the year this year, is like and one of the biggest steals of the draft. And they this kind of like this neat example or this neat kind of like erudite kind of view around the team. Erudite's not the right word there. I don't care. But like this cool like emotional thing. It is. I read about it in the car. It's like there's this cool like emotional feel around the team. And that's what I like about the college football scene this year, which you mentioned with like Liberty and things like that, which is like you're going to get some teams that are going to come out of the woodwork this year that are going to come up and step up. I mean, there's a couple teams in the Pac-10 or Pac-12 or whatever it is now, Pac-6, that are like out there now that are playing
Pac-2.
Yeah, the Pac-2, fine. That are playing. They're going to be playing bigger teams that should have been playing big teams along the way, or should have been doing that 2 years ago or 3 years ago, and now they're finally going to get their due because they're actually stepping up and playing teams that they deserve to play.
Okay, so let's get to the NFL. You mentioned Shadur, who, by the way, is not even the starter. It's Joe Flacco, and then it'll be
Kenny.
My God.
Do you think Joe Flacco's going to play more than a half on that Sunday, the opening Sunday?
Flacco's
yeah, right. Wait till his legs get broken when he steps back and doesn't even get hit.
We don't wish injuries upon
No, we
players,
don't, but what is he, like 50? He's my age.
Yeah, he's your age, not 50. NFL, you've got the Ravens, Bills, Eagles, Chiefs as the preseason favorites.
Wow.
I mean, really taking a step out of line there. Those are some obvious ones, guys. The teams that have been in the championships of the conferences for the last 5 years. Who do you like to win it all?
Oh, geez. I actually think, gosh, I don't know. I mean, I want the Vikings to win. I've been thinking a lot more about your Broncos. I think honestly, I think the Browns are going to kind of be a force. I'm telling you, I think the Packers could be decent this year.
That's a better one.
And I actually
hurts me, but that's better.
It should hurt. It should hurt a lot. And I actually think you're looking at a team, possibly, I mean, in the randomest ways. I think you got to look at like the Arizona Cardinals, believe it or not. I think the Cardinals could make some noise in the NFC just because that NFC West is garbage. Or somebody out of the NFC South too. I mean, I think Tampa Bay's out there too.
Tampa Bay could be good.
And so you got to look at these teams, Jake, that are going to come out. And I don't know if you could maybe comment on this because you're a better sports guy. One thing you're better at than maybe is sports, not sports betting, but sports commentating. And that may be something that you've done instead of learning how to spell. Is like what they haven't changed the playoff. They haven't changed the playoff picture yet because a team that comes out of a division that they win can get a couple home games and you get a team that starts rolling like a Tampa Bay, like an Arizona. And I think that's where you're going to look and see this year, especially. And I'll tell you another team that's going to make some noise, I think, this year. It's out of the AFC East because you got the AFC East that's not that great.
Like the Patriots?
It's not Buffalo, it's the Patriots.
I agree.
And it's Travion Henderson, who actually is a running back at Ohio State, not Jeremiah Smith, who's a wide receiver.
We'll
but there's some things in divisions that you have to look at. And I'm going to tell you another weird one. How about a terrible division? The AFC South. I mean,
Yeah,
you
you like the Jags?
Yeah,
Yeah.
you like the Jags. I like the Jags stepping up and coming back on this thing because you got the change of the coaching.
New coach,
you got your boy Travis Snyder.
Hunter.
Yeah, Travis Hunter. And it's like his brother Travis Snyder and Travis Hunter. It's like you've got these teams that are kind of like under the radar. And then you mentioned it a while ago, which I'll give you some credit for. The Broncos look ridiculously good.
Yeah.
I mean, I don't know where these guys came from. And you kind of go, you look at the preseason. We talked about the preseason and how you can kind of find these position battles. You can find like these little quirks that these teams have. I mean, I hate to say it, man, and this is actually going to be something that I hope we don't play on the pod. The Bears don't look bad either. I mean, Ben Johnson looks ridiculous. And there's going to be these teams this year, which I'm really excited for. As you can probably tell, I tend to get a little hyper about these teams this year that are going to be against that typical like front guard of the NFL. I think you'll see a lot of teams step up and really come to play.
Yeah,
here.
yeah. I'm still on the Broncos train. I think they're going to roll.
What do you see on Broncos futures, by the way? Yeah, what's the fun fact on Broncos futures? Still 18?
We saw 30 the other day.
30 still.
Yeah.
I would put that and take that to the bank. Put that in with some other say hedge bets. I'm more of a hedger. We're kind of risk managers. We do a lot of arbitrage stuff. Yeah. I'm always kind of I like to trade things along the way. Broncos at plus 30 to win the Super Bowl. I mean, they're going to get to the playoffs. I think that's pretty damn obvious. Sure. I mean, you look at that versus what, like a Buffalo or Kansas City. That's where are they at? 4-1.
Yeah, something like that.
5-1. I mean, value. Hello, and I'm not even a value stock guy.
Fun fact. No, you're not. Fun fact on the Cardinals. They've been in an organization for over 100 years. They've never had a coach more than 6 years. That's an organization in disarray. They're not going to do anything this year.
Well, that is a disarray. It's also Arizona, so it's the desert. There's no water there. There's too much sun. And they have this also guy there. Kyler Murray's actually a really cool looking quarterback. You want to talk about a guy that's fun to watch?
He's my height, basically.
I would say he's a little bit taller than you. It depends if you're standing on phone books or not. But then secondly, those are things back in the day that we had when I was growing up. And then also like the other thing is too is like the Cardinals provided their healthy Marvin Harrison Jr., who's an Ohio State wide receiver.
He's gonna have a big sophomore
season.
Again,
a wide receiver, big time sophomore bounce back. I think he's comeback player of the year.
Agreed. So let's preview. I think Monday night, first Monday night of the season is
Monday night is the night we're going to dinner.
Vikings at Bears.
What? Oh my gosh!
Vikings at Bears
tickets.
are two teams.
Yes,
I've got the
I'll
Bears.
be on the sidelines.
I think the Bears look great. I think the Bears are gonna come out firing. Ben Johnson's gonna have some trick plays in the bag right away. I expect the Bears win.
I think it's gonna be a great game.
I think you're gonna eat crow on. We got a podcast scheduled for the next 3 days.
I noticed that. The next 3 days. We're gonna talk for the next 3 days after that because you're gonna be crying in your cereal.
Yeah.
I think there's gonna be a great game. I think you're right. I think I just know this from being a Vikings fan and living in Chicago, in prison in Chicago for 25 years. I've gone to so many Bears Vikings game at Soldier Field. I basically enjoyed like one or two of them. One of them was the year that
Soldier Field's a terrible stadium.
No, not even so much that. It's just like the Bears fans have been jerks to me for some reason. I mean,
I'm sure you're being a very
nice
calm fan.
Nice fan, and they were also very sensitive. And then secondly, frankly, the Vikings showed up and they sucked most of the games. I mean, the only other game that I enjoyed the most was I think it was the 07 game when Adrian Peterson ran against Devin Hester back and forth. The AP just basically had his breakout year and breakout game, and he didn't even start the game, but he ran for like 240 and just freaked the funk on the Bears defense. But other than that, like the games have sucked, and the Vikings have come to Soldier Field, whether it's been like 20 degrees below zero, I was at that game, or like 55 degrees in like freaking December, and they've stunk. So I wouldn't be surprised if the Vikings lose that game. And if you're looking to place a wager on that, I like the total on that one too, I think, as an over. But more so, I would look at the home team on that one to cover.
Yeah, I agree with the Bears. Bears are going to look good. Bears are coming out hot. Let's get to a new segment, Scott.
What?
A new segment we're starting today, the Retail Investor Spotlight. What I want to talk about today is this trend that we're seeing in the markets. And you've got a really unique perspective of A, being obviously on the institutional side as the chief investment officer and portfolio manager, but B, you're a financial advisor, so you're working with retail investors every single day. We're seeing that equity allocations are at all-time highs in portfolios and 401ks across the investment landscape. First and foremost, what do you make of that trend? But also, do you see that trend making its way through your book of business? Is that a conversation you have with clients? I mean, why are people so heavily invested in equities relatively compared to the last 100 years or so?
It's because guess what? Until about like 4 years ago, everything else has sucked.
Yeah.
Like I mean, or including rather, it's starting 4 years ago. Like everything else, I mean, Bitcoin's been good, but nobody believed in it. I didn't, and then I got on the train, and then jumped off the train, then got back on. Ethereum, all those guys, Solana. It's like a lot of these things that are out there, man, other than equities, and it's been fun to watch these equity numbers because they've been freaking crazy.
Yeah.
I mean, you mentioned these names earlier, like the Palantirs of the world.
Yep.
Absolutely nuts. Like I was talking to clients about Palantir like 5 years ago. Didn't buy it, but we were talking about it like 4 years ago. Peter Thiel and those guys. And like everybody's like, Palantir, what the hell is that? It's like $15. Oh, it's up to 20. Let's sell it. You know, and I agreed. I mean, we sold something.
There you go. That's your dumb voice.
That is my dumb voice. That's actually yours. I was talking to you on the phone, with you on the phone, because I need your help, and you actually didn't provide any. But it's like there's not equities have been an exciting place, and there hasn't been anything really exciting. And bonds have not done, Jake, what they should have done the last few years, which has been somewhat of a more stabilizer. And so, other frankly than Bitcoin, and until recently gold, there's not been another game in town.
That is definitely part of it. Is there is no alternative, and I think a lot of people, Tina. And I think
like from my first girlfriend.
Yeah, the conversations I've had with our Kingsview advisors and retail folks is that, you know, the people that have been invested for more than 20 years that have seen '08 and seen 2022, they were burnt by bonds in both '08 and '22. They didn't have correlation matrices broke down. In '22, you had stocks down, at 1.20 and bonds down 15. Where was your safety? And so at that point, people are like, why would I not take the risk trade-off to go into stocks and have the higher upside? Because that is where the alpha is. And so that's what I'm seeing when I talk to our advisors within the firm is that, clients are looking for returns. And I think that is because there's an absence of protection with the bonds.
That's a great call, dude. And I think that's a great way to put it because of the administration, because of, this little ungoverned body called the Federal Reserve. And I think also, there's this weird term I would use when it comes to like equities, risk versus reward and capture and things like that. And the slope being positive is in a positively sloped market, like a positively sloped S&P 500, where like you have a slope of something that is going up over time. Yeah, there's these little fits and starts and EKG type movements. But if the thing goes from lower A to higher B, because it's positively sloped, like as long as you have time and you get your time dialed in, and maybe you can be flexible at the end time of like saying, okay, well, we have a 2022, it stinks, and then we bounce back. We have an '08, '09. But then guess what the worst thing was about '08 and '09? I was like 20 years into my career at that point. The worst part about '08 and '09, sure, the banks, all that stuff that happened, the mortgages, the robo-signers, all that crap. But the worst part was if you were in '08 and '09 and you either had a timeline that was ending there where you had to like change into something else, you had to like de-risk, and then, you had to sell everything at the bottom, or you just got off the train or got off the roller coaster because like, I can't take this anymore. You had another like 25 years to invest, or 20 years. The people that got hurt the most in '08, '09 were those long-term investors that sold.
Yeah, for
and
sure.
didn't stay the course. What we've talked about with our investors, and you talk about that about clients.
This is a huge theme we talk
like,
about.
I like markets that sell off, Jake. I like stuff that gets a little tumultuous. I like when my mom calls me, and when you actually call too, and when you come in crying at the office, or some of the guys that work for us and gals, and they come in crying and be like, oh my God, we can't take this. It's so bad. The market's down again. We're like, how about the media? The media is like freaking out about like, oh my God, S&P's down five points. Oh my God, the S&P's down 50. Oh my God, the Dow's down 500. Oh my God, the Nasdaq's down 300. It's like they're freaking out. I love those times. That's when you have to put more money in. The chips have to go in. It's when everybody's like calm and cool and like, this is a great time. Like, let's invest. That's when I'm like, okay, this is a problem.
Yeah, for sure. And I think another thing that contributes to this trend is the growth of ETF and ETF vehicles. I mean, Bloomberg showed a stat yesterday on Bloomberg Network that there is now more ETFs available than individual stocks. That means there's 4,300 ETFs available to invest in. The optionality, and this is something that I have to, that we talk about with our advisors all the time, is you move to an independent firm and you've got, the freedom to choose assets and investments for your clients. That optionality is a double-edged sword. A, yes, you have all these differentiators and amazing products. B, how do you filter through the fads, the trends, why people are launching ETFs just for a short-term, trend or something that they're seeing? It's extremely difficult to navigate those open waters when you've got 4,300, strategies packaged into an ETF to choose from.
Well, is it?
And how do you do that with your clients?
I'm not sure. I flip a lot of coins. What's funny about those things? And Jake, it's kind of an interesting concept because like it goes to show you though that the market for investing is kind of a neat one in the sense that you do have choice. A lot of problem is though, a lot of those 4,300, I think you said 65 ETFs that are out there, about 4,300 and like 45 of them correlate.
They're all
they're all the same thing.
Similar.
It's like, there's a really good looking guy that walked by that's wearing a white shirt. And then like, I'm wearing a blue sweater. Yes, there he is. Blue shirt. You're wearing a nice top, I guess. And like, these all are like good. These are all good wears. Like these are all good looking shirts, but like, they're all good looking ETFs in a weird way if the market's going up, and they're all crappy looking if they go down. Like I want, this is why I think we do what we do at Kingsview, and why, like you mentioned with my clients, what I do, and this may be the long-winded way of doing this, saying it is like, I like to invest in things that are different to each other.
Yeah.
I like different things, doing different stuff at different times in the kinds of accounts, because overall the idea is from A to B with less risk.
For sure.
Or A to B to C. How about A to C with less risk? That's how I want to get there. You don't get there by buying stuff that does the same darn thing day after day, or stuff that's really correlated, or stuff that has the same underlying holdings. Nowadays, you advisors, clients contact us. And Jake, you and your team, props to you. You guys run all these cool data analytics and these cool experiential kind of studies where we can find out what is really the crux of these ETFs and what they actually hold and how they do in various stressed markets. And that tells you, Joe or Jill investor, what that thing we'll know what those ETFs possibly will do in a stressed environment. Versus like turning on CNBC, Fox, Bloomberg, and saying like, "Oh my God, the market's down, get out. Oh my God, the market's up, get in," and you missed the you rode the downside and then bought in on the upside. Meaning, we actually have the tools to say what those ETFs are about, what they can do for you as an investor.
Yeah, and if you invest in things that do different things at different times, like you said, it allows you to take a more resolute approach to staying invested. And so if everything in your portfolio is not going down, if you got some things green, some things red, you don't feel the sense of overwhelming, I need to get out of the market, or the sense of I need to put more in. So you can maintain that diversified portfolio. And so the optionality, the different choices does give you some pros. It also can be a little scary to be navigating.
I guess, but I think you made the right point. Like, it can be scary to navigate, but you can tap into an expert or two to help you find that out. And you just said it though, dude. Like, the chance that you have to like now mix and match certain things is really amazing, and allows you to give that exact, like you said, that calm and that peace of mind to know that like you have stuff in your portfolio that, unlike in 1988, which again, back in times when you were basically learning how to drive and things like that, it's like when you were like, you could buy like one
drive
thing,
a Tonka truck, maybe
drive that, or drive that little like that convertible thing with the battery operated power. It's like you have like, it's like that little kitty car. It's like you had like 10 things you could buy that were like growth. And you had like one thing you could buy in 88 that was like a bond. And then like, if you're lucky, even where the NYSE was. So it's really neat to have all those options out there. And like you mentioned, and option strategies and ETFs that we have too, Jake, that do different things at different times to help the investor get better at that whole peace of mind thing, like that chill thing. And I could take a chill pill too, but that's because I just like being with you, Jake.
I like it. Yeah, we are at the end of
the listener.
We are at the day emotional investors, and so we need to do, our job as the professionals is to kind of keep that emotion to a minimum, and that's why we choose different things at different times.
Good luck at that. I've already cried twice in this podcast, so let's go.
Scott, let's get to everybody's favorite segment so far. Fade or trade. So we got 5 topics today. You're gonna tell me if we're fading or trading that topic for the trend, and I'll see what I have to say about it, and we'll see if we're in agreement or in disagreement. This has been fun so far. All right, Scott, fade or trade. The last 4 months of the year, we will see a VIX or a volatility index above the 200-day moving average of 19.
Like for a day?
Sustained volatility.
What does that mean? A month?
For the majority of the last 4 months, we'll see heightened volatility.
Fade it like crazy. It will go above 19 because we'll have, hopefully, God willing, we'll have a nice sell-off that we can buy more stuff in. Because I'm jumping in with both feet like into the pool, and might even actually, usually I wear a t-shirt in the pool. I'm like that kind of kid. And so I might even take my t-shirt off and jump in the pool if we get VIX over 19 any day. How about that?
Yeah, I mean, we'll see if you're right about the disagreements, because I'm trading that.
You're trading that?
I'm trading that.
Jake, that's a mistake. Okay.
I'm trading that. I think, August, we covered this a couple weeks ago. August is historically the best month of the year for the markets. That doesn't necessarily mean low volatility, but it means that the market's
bad because of the crash of 87.
Slope up, and we'll see the end of the year with data points that come up. We'll see if the Fed cuts and how the market actually reacts. Yeah. I think we see heightened volatility above 19 for some period. I don't know if it's
some period. Okay,
months.
It could be like 2 nights. Great.
No, I'll be honest in December if we've had it or not.
Well,
how about that?
How about you be honest now and say that you're wrong? But go ahead. Sorry.
Scott, second, fade or trade. This is a fun one, I think. A little more nebulous, and we won't know for about 4 or 5 years. But there will be a $10 trillion market cap stock by 2030.
Trade it. I would assume, unless like something goes bump that night, and like we have this crazy like global meltdown, financial crisis part deux, which I think I might see happening at some point. But until then, once we get to the $10 trillion market cap, that might be the very end, or the aliens come down and give us more money to borrow and run up as far as debt. So yeah, I'm buying that. I'm trading that. I
am trading that as well. I'm gonna pick a name here. Obviously, the largest
Palantir?
market cap stock.
Tesla.
No, Nvidia's at 4.5 right now. It's up 1,300% the last 5 years. Who's to say it can't go up another 150% in the next 5? I don't want to be on the losing side of that, so I'm gonna say Nvidia goes to 10 trill. It's only 2.
That's not bad. It's only 2, he says.
For Tesla.
I might say Tesla. Tesla's over 1, but that's fine.
I thought about that too, but
well, you didn't say it.
Because I don't think they're going to 10x.
Okay, great. I'm going to do the last three then. Let's see on
You
Tesla.
go the last three.
Yeah,
that's
I
fine.
don't think they are going to do 10x, but if there's anybody that can do it, Elon Musk could, and he also shares my birthday, June 28th.
Right.
How about this? Fade or trade, Jake. Let's stay on cars. Car sales in the United States will continue to slow through the rest of the year and into 2026, meaning like new car sales, used car sales. Most people walking, taking scooters. I don't know what you do. You use your bike or something like that. Like
I scooter or divvy to work. I'm fading that though. I think there was a big rush at the start of the year to get cars in before the tariffs went into effect. Whatever the consumer thought in terms of how quickly tariffs were going to go into effect on imported cars. So we needed to get cars. Saw April numbers were really strong. June slowed down immensely. But the fall is usually peak car sales season. You turn on the TV, turn on the commercial for the Bears game, where your local team is going to be the local dealership doing some sale with a cringy name. So I'm fading that. I think car sales will pick back up for the rest of the year.
I actually like the names of the car sales, so I don't know what that makes me cringy probably in general. But like, I also think you're right. I think the car stuff got really jacked up because of COVID. And we couldn't make the cars. And then there's this thing that Biden did. I forget what it's called. LOL. It was like the Green New Deal. And so it was like the Green New Steel, which is basically when they try to make cars that were all electric.
Yeah.
And like Gavin Newsom. And listen, I don't hate these politicians. These guys are just doing the best they can, sort of. It's just a horrible job that they're doing, whoever they are, all of them. It's like Gavin Newsom said, I think it was and we did a thing on Fox about this once. It was like I think it was originally 2035 and not be 2030. Every car has to be EV.
Yeah.
In California. And like they don't have the charging they don't have the charging spots. The companies don't have the chance to make them all. They don't have the materials. Like they're too expensive, blah, 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 blah. Anyway, it's just a dumb idea. So that you're right. Car sales got like poo-pooed for a while because people couldn't afford them and there wasn't enough supply. I will tell you this. There's some cool cars out there, man. There's some cool tech in cars. There's some cool stuff that can happen with your car nowadays. That said, you agree? We're going to trade that one.
Trading that.
Yeah, I like it.
Sorry, I'm fading that.
Fading that. Yeah, I said I tricked you. Okay, how about fade or trade? This is gonna be tough because I know this is like your kind of like pseudo girlfriend. Taylor Swift's next concert tour. Sorry, Travis Kelce. Taylor Swift's next concert tour will exceed her Eras tour revenue, which was 2.07 million. Effectively was the new Eras revenue. Her next tour, which I think is going to be Confessions of what a side girl or side piece. What is it?
I don't know what
Showgirl.
I don't know what the name of the album is, but
Yes,
she announced on a couple weeks ago that she's going to do another album, so that will provide another tour after that. I'm trading that. It's similar to the $10 trillion market cap thing for me. I don't want to be on the losing side of that. She's only growing in popularity. She's got football guys and gals that their significant others listen to music, so now they're all going to be going together because of Travis Kelce. So absolutely, the only thing that could provide a little bump in the road is people that like Taylor Swift music. They want breakups, they want heartbreak, they want sadness, and she's happy. And I don't know if like the happy songs really are relatable to people. I think people want like heartbreak and anger and like crying in the room.
Fights
so
and
I'm gonna
yelling
trade
and screaming.
But that might be the bump in the road.
That's pretty awesome. So hey, Taylor and Travis, if you're listening, just fight once, please, because like you guys are way too happy. I mean, it makes me sad that you guys are so happy. And so it's like, I think that's a hell of a point, Jake. I like that. And I think that too could be the whole point of like maybe the Confessions, maybe, but then again, you know what? Maybe this is the tour that like helps people realize that relationships maybe actually do work long-term, because the only person I know whose relationship is working is yours and your lovely, soon to be whatever. We won't mention her, but she's lovely. And that's working. And it makes me sad too, because nothing's working for me yet. Surprisingly, I mean, it's a shocker thing, but more so it's like, maybe this is the thing that helps people realize that like we can get along. And we can have a significant other that does love us, no matter what.
If there's anybody that can do it, it's Taylor.
I love you, Jake. Last thing, fade or trade, Jake. Let's do a random ticker from behind us. So here's the deal: we've got these, we got this ticker going up behind us at the CBOE.
I gotta tell him I love him also. I can't leave him hanging like that.
And what?
You said I love you. I gotta tell you. I didn't
back.
back.
Actually expect to hear that back.
Yeah.
I don't know. It's great, Jake. I know you don't mean it, but thank you. So we're gonna do this. We're gonna do a ticker behind us, and I don't know if you're not watching it, you can kind of pretend.
Yeah,
that
check
there's
it out
a ticker
on
going
YouTube.
behind us, and it's moving at about, I'd say, a snail's pace, or a pace at which Jake runs the 40. And it's like there's a ticker behind us. So Jake, you're gonna point. Do you want to just point to a ticker, and we'll just pick out the ticker. We don't know what they are, and see if we know the stock. Number one, which is scary. It's kind of like Jim Cramer's lightning round. I hope he knows the stock symbol, and then we'll talk about the stock briefly, and then we'll let everybody go with like a last number to watch. Thing.
We got a perfect one right behind us right now. Not planted. We got TSLA. What is that?
Can we move on? I think that's TNA. Let's see, TSLA, Tesla.
Yeah.
We just talked about Tesla, though, man. Tesla, I think, goes as your first $10 trillion company. Elon Musk has been taken through the dirt. His numbers stink. I will be sure of that. But the cars don't. And I think it's also one of those things where there's been a lot of dogging of Tesla. There's been a lot of things that have happened with Tesla that have not been great. If you notice, that Tesla truck thing finally got eradicated, and now that thing doesn't break. The windows don't. In fact, I've tried to break a couple Tesla truck windows. They don't break. The Model S, the Model X. There's some other, there's some other models that are coming down the road. Nobody's really talking about this either, man. The robo-taxis that came out in Austin, Texas actually supposedly did pretty well, but I haven't heard anything bad other than the fact that I think some of them like did go to the wrong locations,
Correct.
but once they picked people up, it was fine. I think that's a new wave of things that people don't really understand the big nature of this and how valuable it can be. So I think Tesla's a buy if that's what we're doing. If we're doing a fade or trade, Tesla's a trade all day long, and especially a trade when you come out and see Elon Musk do something silly, which he hasn't actually done in a while.
Yeah, I'm disagreeing. I'm fading Tesla. I'm selling Tesla. I think until he can refocus on the company and stay out of the news and stay out of politics. He just sued OpenAI and Apple. So that's now on his plate for what is it, antitrust lawsuit. So he's got to deal with that now. I think the test in Austin didn't go as well as you're saying. I think there were some car crashes, B, some weird swerves into different lanes.
So you must have been driving then, is what you're saying.
I'm fading Tesla in the short term. I think there's still some price instability there.
Yeah, there could be. But I also think, Jake, one of those things that you think about with Tesla is, I mean, Starlink is an amazing service.
Yep.
I don't know if you ever heard of this company called SpaceX. It's pretty good. The
SpaceX,
boring company.
Yep.
There's a lot of things that are in Tesla that I know aren't part of Tesla stock, but if they show who Elon Musk is, and you're right, he has been stepping away from the company a little bit from regards to even doing more stuff on X versus what Tesla has as a company. But I think it also is a testament to how good Tesla is, because Tesla has still maintained, in my opinion, the ingenuity and the engineering that made it so great back in the day. And here's the one quick thing about Tesla that I'm going to end this with, or you can finish it, is that remember back, I think it was like 2013, 2012, again, back to our favorite people in the media, they talked about how Tesla, I'll never forget it, in like the afternoon of one lonely day of mine, Tesla was basically going to be on the verge of bankruptcy because they needed to raise money, and like they're going to say how Musk was going to raise this money and raise that, or no, he wasn't, he was get the funding. And dude, like the company raised the money like the next day or that night and then like took off. And so you get these guys on TV saying like, oh my God, I wouldn't touch Tesla with with even your money, Jake, and blah, blah, blah. And they're going to go with Bolo. And then like 2020 and 2025, they got robotaxis, they got self-driving cars, they got Tesla trucks, they got rockets going into space, and they have Starlink that's basically the best internet that you've ever had and even works on a stupid iPhone.
Yeah, all great, innovation.
Thank you, Jake.
From Elon. I'm still fading it in the short term.
Wow,
Scott, let's wrap up with another new segment.
This is the end, right?
Show.
Thank goodness. Okay.
But one number to watch. So one number to watch from now until our next show in a couple weeks. So it can be a data point, can be a score from a team, can be an earnings report. I'll start if you would allow that. I'm
not ready, so go ahead.
That's great. I've got two numbers for you, a little bit of a cop out here, but I'm going to say two numbers to watch, 196 and 15. 196, NVIDIA reports earnings as you're listening to this afternoon. The expected move for that stock's about 5%. I'm looking out to September 19th, which is the next, full standard options maturity date, and that's 8%. That's $16 or $15 higher from here, so that's 196. I'm looking at NVIDIA to go to 196 in the next couple days following a blowout earnings report. And then speaking of 15, Scott, you're going to love this one. Second number is 15. Look for Rome Odunze on the Chicago Bears to be dancing in the end zone on Monday Night Football as the Bears beat the Vikings. I think Rome's going to have a massive breakout sophomore season. We got a new offense for him. Ben Johnson has done really well with 2-3 receivers for the last 5 years. Look for number 15 to be dancing in the end zone on Monday Night Football.
Like once, twice, 3 times. I mean, what is he going to score?
We'll call it once, but I think he's got 100 yards and a touchdown on Monday. I think Caleb's going for 300.
Right. Let's see if you put your money where your mouth is. Well, guess what about that?
There's no response. You just give your number.
Well, no, we didn't, because here's the deal. It was one number to watch and one for each of us, and you gave 2. So I think I'm off the hook.
I don't know.
Okay, no, here's my number. It's going to be basically, the number is going to be the following, and it's going to be, I'm going to do like you, and I'm going to steal like your number. I'm going to take the median of this forecast between 13 and 18, which is basically 15. Let's call it 15 and a half. 15 named storms, hurricanes in the Atlantic season when it comes to hurricane season in the Atlantic. Because I'm a big, weather guy, as you probably know. I'm a freak, actually, when it comes to weather. I love weather more than life itself. And the weather's getting dangerous. And the weather's getting really messed up. And I think the weather's trying to kill us, frankly. And so one of the things that's going on, besides the atmospheric pressure and some of the atmospheric moisture that's out there that's higher than normal, if you don't believe me, watch the sunsets at night. Even in Chicago, we get crazy sunsets. They get crazy bold and crazy livened up because of all the atmospheric moisture and some of the ways that the air is now. So the forecasters anticipated, and these are pretty good forecasters from the National Hurricane Center, 13 to 18 named storms in the Atlantic, 5 of which are supposed to be major hurricanes, meaning 2 to 5 roughly, but they're saying 4 to 5 of late, supposed to be major hurricanes, which are basically Cat 3 and above. So those are big deals, because 5 hurricanes, if they're bad, likely 2 or 3 of those hit the U.S. And as the way the economy is now, as big as it is, as bold as it is, as the way a lot of folks have moved to the coast and have moved to areas where there are hurricane risks, and as insurance companies are getting blasted, as ways companies are getting put out of business by all the terrible disasters we've had in the last couple of years, and the ways that like even FEMA's out of money and things like that. This is a very interesting economic situation that's starting to develop as we see the Atlantic hurricane season developing. So 13 to 18 being, let's say, 15 and a half storms, if we do have the half storm, is interesting. And so far, we're off to a slow start. But I remember this 3 years ago now, I guess in 2022, we had a very slow start to the year. And we got some nasty storms, including Hurricane Ian, which smashed my cottage in Fort Myers outside of Captiva, like smashed it. And Hurricane Ian was terrible. And then we had, a couple after that, Milton and so forth later, a couple years later, meaning that like, don't get lulled to sleep on the fact that our podcast is going a little long here and I'm being a little bit verbose, but more so too, that we get all this thing, again, these forecasters who are pretty good. We're like, oh, we've had, you hear like the Weather Channel and so forth. I do a lot of Fox Weather too. And they're awesome. That's a great network if you haven't heard it or listened to it. And they'll be on there talking about how the forecast, or at least the named storm season has been slow. That's a bad sign because that means that we're going to get about like 5 rushed in together in October. So just be careful out there because I think the hurricane season this year could be actually a pretty dangerous one.
Good. Well, not good, but
yeah, good. Not good, Jake. We want to put a not in front of that.
Yeah, good. Interesting thing to keep an eye on. So 196 for Nvidia stock, 15 for Roma Dunze dance in the end zone, and 15 and a half
named storms in the Atlantic hurricane season.
In the Atlantic.
And one may be actually named Jake. There's actually not the J. You don't have the J letter this year, but I want a Hurricane Jake sometime, which may be the
powerful.
Next podcast.
That'd be powerful.
It might be the next podcast when Jake comes in and the Vikings to beat the Bears like 30-7.
Yeah.
So yeah.
Yeah, well, that's our show for today. Thank you all for joining. We'll be back in 2 weeks from now to recap. Well, first and foremost, Bears Vikings, and then we'll see what the Fed is on tap to do.
Save your tears for another day, Jake.
Kingsview Wealth Management is an investment advisor registered with the SEC. Registration does not constitute an endorsement of the firm by the SEC, nor does it indicate that Kingsview has attained a particular level of skill or ability. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities. Investments or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. All opinions expressed by the positively sloped participants are solely their opinions and do not reflect the opinions of Kingsview Wealth Management, its parent company, or any of its affiliates. You should not treat any opinion expressed on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of an opinion. Such opinions are based upon information the positively sloped participants deem reliable. Kingsview Wealth Management serves as portfolio manager to separately managed account strategies and investment advisor to exchange-traded funds. As of the date of this recording, those strategies and funds held positions in Nvidia, Microsoft, and Amazon, and did not hold positions in Strategy, Palantir, Aploven, Apple, Google,